Welcome. We are super excited to launch the Forex module at Market Newbie. I know many of you have heard about Forex and you are very eager to get started, but we ask you to hold your horses, go through this series before you start trading. Because although Forex can give you great return, it is also associated with high risk. In here, we'll set the stage to introducing to you some fundamentals in Forex trading. Let's start with currencies. Why do we need currencies? Here's an example. If you travel to Australia and you need to buy souvenirs, you need the money in forms of Australian dollar, which is the local currency. If an American company wants to import goods for Japan, it will probably need to pay in Japanese yen, and this is another reason why we need currencies. So what is Forex market? Forex market is where currencies are traded. It's one of the largest and most liquid financial markets in the world. The trading volume can reach over $5 trillion per day, and this is much greater than any other equity markets. There are three basic features of Forex market we need to know. First is that it's decentralized or over-the-counter OTC. Second, it is done between traders and traders directly. And third, it's open 24 hours a day, 5.5 days a week. Now, let's get into the individual features separately. Decentralization. This means that the market does not have a centralized location, but rather it's created by a network of different devices. The second feature is trading between traders. Forex market allows traders to trade directly with each other, and therefore they don't need to go through a financial moderator. This reduces trading commissions and expenses. The third feature of Forex market is the long operating hours. It is from Sunday 5 p.m. Eastern Standard Time to Friday 5 p.m. Eastern Standard Time. There's actually additional half a day open in Dubai on the weekend, but this is done with very low trading volume. Some time periods are busier than others, and the two most active times are London Exchange and New York Exchange open hours. So, what's the difference between Forex and equity market, and why is Forex good? In terms of trading instruments, there are very few in Forex, whereas there's a lot in the equity market. In terms of liquidity, it is very high, especially for major currencies in Forex trading, whereas liquidity is medium to high and sometimes very low in a declining equity market. Manipulation. Forex market is rarely manipulated, whereas the equity market can easily be manipulated. In terms of long or buy and short or sell, in the Forex market you can profit from both directions. In the equity market, it is very hard to short sell. Lastly, its margins. Forex requires very low margins, whereas in equity market it is very high and sometimes margins are very hard to get. For us to learn about Forex market and to be successful in trading, we need to know its good and bad. And let's discuss this in terms of Forex features. Long trading hours. This is good because you can trade whenever you want in weekdays. For people who have a very busy schedule in the daytime, Forex is a good place to trade. Obviously, the downside is that this might require more frequent trading because of long trading hours, and it could trigger cost and greater energy consumption as well. Low margin requirement with high leverage. This allows you to get much more profit by using a small amount of capital. However, this also means a greater risk if you do not manage properly. Lastly, we mentioned that in the Forex market, you can benefit from both directions. But this also means you can lose on both sides as well. Before we start, we need to learn the good practice and philosophy behind successful Forex trading. First of all, always plan your trade. Never ever enter a trade without a plan. You need to know what's the reason you want to enter this trade, how much money to invest, what price to get in, what's your stop loss, what's your take profit point, as well as the other elements. With a plan, you will know exactly what you're doing so that you can remain calm when things turn bad. Second of all, keep a trading log. Write down what you learn after you finish a trade, no matter whether you make money or not. Write down what you've done good, what you have done bad, what could you have improved. Sometimes a loss could teach you a better lesson. You could learn from mistakes so that you can prevent from making it again in the future. And last not the least, learn continuously. Success takes practice and continuous learning. To be a good trader, it will take time. We need to stay humble in front of the market and learn all the time. One way to do so is to follow us at Market Newbie. In this module, we will teach you the fundamentals in Forex trading. Specifically, in the first 5 lectures, we will introduce you to basic knowledge. This includes what's the Forex market, reading a quote, base currency, counter currency, major currency, counter currency, margin account and leverage, lot, pip. In the next 6 lectures, we will teach you how to execute a good trade. This includes long order, short order, close order, market order, limit order, stop order, risk management, position management, and how to make a good Forex trading plan. Coming up next, we will show you how to read the quote. This includes understanding base currency as well as counter currency. Thank you for watching this video. If you want to find more materials, go to www.marketnewbie.com or connect with us on Facebook and Instagram. See you in lesson number 2.